Okay, it's 6:05, so I think we're going to start. Hello again, everyone. My name is Paola Taras, and welcome to this panel discussion hosted by the New York State Higher Education Services Corporation, also known as HESC. So we are New York State's higher education agency, and we administer the Tuition Assistance Program, also known as TAP, as well as many other programs that help students pay for college and access college. So today we are here to discuss college award letters, and award letters for the most part outline what financial aid you can receive from the prospective college. And if you have applied for multiple colleges, you will receive multiple award letters. And it is important to review and compare each of these award letters in order to choose the offer that is most affordable for you and your family. So during this panel discussion, we will discuss pieces of information that you will need to review on the award letters to make sure that it is the best financial college choice for you. And if you guys have any questions during this panel discussion, please use our chat feature or the Q&A feature. And my colleague Maria will be able to assist you, or you can wait until the end where we will address questions. So to help us better understand award letters, we have two amazing panelists joining us today. We from the Higher Education Services Corporation, my agency, we have Michael St. John Turner, who is the Client Relations Manager, and from Unsubsidized, we have Brendan Williams, who is the Senior Director of Consulting. So I don't know if you guys want to introduce yourselves, say hi before we start.
Hi everyone. Mike Turner from HESC. Glad that you could join us today.
And I'm Brendan Williams. I'm from an organization called Unsubsidized that helps students navigate the financial aid process and walk students through the college affordability process. And excited to share my expertise and help y'all figure out those financial aid offers today.
Thank you so much, Mike and Brendan. So to begin, we will have a presentation by Mike Turner, who will be sharing the key things that we should know about award letters and also provide an example of an award letter. So Mike, you can take it away.
Sure thing. So thank you again for joining us, everyone. Mike Turner from HESC. So I'm going to do a brief kind of overview of understanding the financial aid offers that you're receiving, just to give you some of the key background information that you need to know about this part of the financial aid application process, which is now kind of toward the end of the process where you're getting your offers. So let's start by talking about some timelines. So for the students who are on, if you're started receiving your college acceptances, typically when you get your acceptances to colleges is when you start receiving your financial aid decisions from those schools. The timeline is usually in the spring if you applied for a regular admission at the college. However, you might have received your offer if you happen to have been accepted earlier or applied through any of those special early admission types of programs like early decision or early action. Some folks may still be waiting for their decisions from their colleges. Or if you've already been admitted to a college and you haven't heard back from them regarding your financial aid decision, I typically recommend that you reach out to the college to inquire about the status around mid-April, so probably in another week or so. And the goal is to make sure that you have all of your financial aid offers from all the colleges who have offered you admission by May 1st, which is what we call National College Decision Day. It's typically kind of the universal date when colleges expect students to make their college acceptance and to sign off on which school you're going to be going to in the next school year. So the earlier you have your financial aid offer, the more time you have to sort of figure it out, and maybe you want to work with the college and clarify some questions. So the sooner is always the better with these things. Now, if you have started receiving your aid offers, they might be coming in many different shapes and forms. One of which is online through your college's portal, which seems to be quite often the option that a lot of students are getting now, where you might get some sort of email notification that says, oh, we've posted your financial aid offer on our such and such site. Can you log in through our student portal? And you log in and you see something that looks like this, which is a digital representation of all the financial aid you're being offered. Sometimes it's broken out annually, or sometimes it's broken out by individual semester, so fall and spring. Other times you might get an email attachment from the admissions office. It says, oh, congratulations, you're admitted, and here's your financial aid decision. And it might be like a PDF attachment that you might have to download. And then traditionally, it's a printed letter that you might get from the college in a admissions acceptance packet that has your admissions letter, it has some brochures, and it has your financial aid letter with some financial aid brochures. Some colleges are still doing that, although printing has a cost. So, we see fewer in colleges offering the printed whole package. And you might have, a more classy letter that has, the university logo, some design. This is what we call the shopping sheet form, which a lot of schools started using a couple of years ago, especially our state schools here in New York, our SUNY schools, where it's kind of laid out in a formula. And when you're looking at these letters, depending on the presentation that they provide, they try to pack in a lot of information on that single page. And so it could seem very overwhelming because we're looking here at this SUNY Smart Track Award letter, and there's a lot of information on here about cost of attendance, the grants and scholarships the students receiving. You see something referred to as net cost. You see all the different programs they're offering, including work study student loans, your family contribution. There's information about borrowing and graduation rates. So a lot of information packed into one letter, which can seem a little bit overwhelming. And you might not know when this is all, right now, this is a blank letter. If this was filled in with all these numbers, you might not know where to look and what this means. So we try to make it simple when it comes to time to comparing your aid offers. And it's a very simple approach. So there's, basically, a couple key items that you need to know in order to make a decision as to whether or not this is a good financial aid offer or not. The first important piece of information is knowing how much is that school's cost of attendance. So how much is that school going to cost us every year? And we'll cover each of these a little bit more in detail. So in order to know if an offer is good or not, you should know, well, what's the price of the college? And that's what we call cost of attendance. You also need to know what types of financial aid they're offering you within that financial aid package. So you don't want to just look at the total and say, oh, hey, they're giving me $50,000. It's more of, well, they're giving me $50,000, but in what specific types of programs? Is it gift aid, free money programs? Is it self-help aid, programs where I have to borrow or work? So you really want to be able to dissect the individual grants and scholarships and other programs they're giving you to know if it's really free money or not. And of course, the more free money you're being offered, the better it is for you, because it means the college would be more affordable. So the goal is to be able to then at the end figure out your final out of pocket, or what they call net cost or bottom line cost. There's many different names for it. But basically at the end of the day, after all the free money has been given to you, how much is the school going to cost you every year to attend? And the best offers in the end are going to be those that are the most affordable to you and your family, depending on your college financing plan and your ability to pay for school. So let's talk a little bit more about cost of attendance. So some schools will present this on their financial aid offer as part of the information that they're presenting. And some schools will give you just an overall annual cost and not really break it out. But some schools do break it out. And what's important to know when you're looking at the broken out cost of attendance is the difference between direct costs and indirect costs. So a college's direct costs are your billable expenses, what the college is going to charge you for and must be paid in order for you to be a student at that school. So those include things like the school's tuition, and if you're living on campus, the housing expenses, so room and board, and then any fees that they may charge you. So registration fees, library use fees, technology fees, whatever it might be, there's going to be fees that you need to cover. Also, as you are going to college, what you're not going to be billed for, but expenses that you're going to be dealing with on a day-to-day basis are what we call the indirect costs. So these are things like, paying for your own books, your own supplies. If you're commuting to a college, transportation expenses, or if you're moving on campus, transportation expenses, because if your college is far away, you might have to pay for a flight to get to that school. And these costs can be different depending on whether you're a commuter at a college, whether you're living on campus or off campus, whether you have to travel really far to get to your college. If you go to college away from home, somebody who goes to college in California who lives in New York might be paying a lot in airline costs if they want to go home every now and then. So all these kind of hidden costs start to come up along the way. But these are costs that are not going to be on your college bill, but these are going to be things that you're going to experience as you're going through your program. Maybe you want to do a study abroad program or something like that 1 year when you're at college, and that might have a whole different set of costs that you need to be aware of. So always keep that in mind, your direct costs and your indirect costs. You also want to be able to look at that letter and clearly see, okay, is this college trying to help me by giving me the best types of financial aid that are available to me, which are what we call gift aid programs. So of course, everybody wants to go to college for free. If you can go to college and not have to worry about paying for anything, that's the ideal setup that you'd want if you're a college-bound student. And if you want to achieve that goal, then you want to make sure that the college is giving you and that you're qualifying for as much free money, gift aid as possible, which typically comes in the form of grant and scholarship offers. So if I'm looking through my college's financial aid package, I'm going to see, well, they're giving me this grant, this scholarship, and I'll highlight those and I'll say, okay, these are free money programs. You also then want to be able to key in on any programs that are not free, which are what we call self-help aid programs, where it's either a student loan or what we call a work study program, where work study is a grant, but it's money that you have to work and earn. So this is something that we'll talk about a little bit more in a moment that came from your federal aid resources. So anything labeled a loan or work study, it's not free money. It's money that you're either going to have to pay back later on plus interest, or money that you're going to have to work for through your labor and earn. So these are not gift aid programs. So the more gift aid that you receive, of course, that means the better the offer. Let's take a look at some of the common federal aid programs that you might be seeing and what the gift aid programs are, which would be your federal grant programs like the federal Pell Grant and the Supplemental Educational Opportunity Grant. So these grant programs are your eligibility for these programs are established through your FAFSA application. So FAFSA was, for a lot of students, that beginning point of applying for financial aid. And they looked at your family's income and a bunch of other factors. And on your FAFSA confirmation page and in your student aid report, which is the output of your FAFSA, they would have given you some initial estimates of your eligibility for their grant programs like the Pell Grant. Now, depending on, the Pell Grant is very sensitive to something that we call your expected family contribution, or EFC. So if you're coming from a family that has a very low income situation, and when you filed your FAFSA, it said you had a 0 EFC, you would qualify for a maximum level Pell Grant. But if your income was a bit higher and your EFC is a bit higher, then your Pell Grant is going to be reduced and you might get a lower Pell Grant. The Supplemental Educational Opportunity Grant is a federal grant program that is administered by the colleges, which means you didn't know about whether you're going to get this or not when you did your FAFSA, but the colleges have the authority to give it to you as part of their financial aid decision. You might see one college offering you SEOG where another is not. To typically qualify for SEOG, you have to be somebody who's Pell Grant eligible. So you would see that you're being offered a Pell Grant and an SEOG grant. But if your family income wasn't qualified for a Pell Grant, then you will not be offered an SEOG. But if you are Pell Grant eligible, you might see one school offering you a Pell Grant and no SEOG, and then another school has offered you the Pell Grant and the SEOG. Colleges have discretion over who they can give their SEOG funds to, and they typically try to give it to the students who have the greatest amount of need. So you will see some differences from college to college as to how much SEOG you're being, if you're eligible, how much they're giving you at each school. Some schools may have not given it to you at all. Work study is very similar. It's a program that's at the college's discretion. It's not a grant program, even though they call it a work study grant. It's more of an employment program where you work for your college part-time, job that's flexible to your school schedule and allows you to receive money based on employment that you could then use to help pay for your college. If you receive a work study grant in your financial aid offer, I want you to circle it and not include it in the total of money that's paying the school. Now, why I don't want you to include it is because it's money that hasn't been realized yet. When you start a work study job, you haven't started receiving your paycheck yet until you work for a couple of weeks and then you get paid, just like any other job. So if you see on your financial aid offer, they're saying, oh, here's $2,000 in a work study grant, that money isn't fronted to you. You're not going to get it at the beginning of school. You're going to have to work and earn that along the way. So most students use their work study earnings to pay for their day-to-day college expenses, less so than the college's bill. So you're not really using work study to pay your tuition or your housing costs. You're going to be using it to buy your books or transportation expenses because you're going to earn that money throughout the year as you work. If you're being offered these student loan programs from the federal government, you might see reference to something called the Direct Stafford Loan and a direct plus loan. So these are federal student loan programs, also determined through your eligibility on FAFSA. And you might see something called the federal direct subsidized loan or the federal direct unsubsidized loan. And if you see that in your financial aid offer, I want you to kind of put a box around it and note that this is a loan. And I want you to be able to clearly distinguish which of these loans are meant for students to borrow and which of these loans are meant for parents to borrow. So if you're being offered a direct subsidized or unsubsidized student loan, that is a loan that's borrowed by the student, not the parent. And the student is responsible for paying these loans back after they graduate from college, and there's a 6-month grace period. The loans that they let students borrow through these subsidized and unsubsidized programs are typically capped at a certain amount per year, depending on what year in college the student is attending. So for most typical first-year freshman college students, the most that they can borrow in a combined subsidized and unsubsidized direct loan is $5,500, and up to $3,500 of that may be subsidized. Now, I'll explain the difference between subsidized and unsubsidized money in a second. But what you would want to know as a student, because I hear some students always say to me, oh, if I go to a college and it's very expensive, I'll just borrow all the money that it costs for me to go there so my parents don't have to worry about it. Students are limited in how much student loans that they can borrow every year because, you're young, you don't have a credit history. So most typical first-year freshmen, the most that you can borrow from the federal government is just this $5,500 in subsidized and unsubsidized loans. If you need more than that, then the federal student government could offer you additional loans, but they would be in a parent plus loan, which is a loan that's then borrowed not by the student, it's borrowed by the parent. And parents have to pass a basic credit screening to qualify. And parents are then allowed, based on their credit profile, to borrow whatever additional amount of federal money they want to borrow to pay the rest of the school off, minus the students' loans and financial aid that they're already receiving. Now, with the federal student loans that are for students, they have a 6-month grace period after they graduate, and then they enter into repayment. Plus loans, if a parent is borrowing that, they have to start repaying it when the loan is dispersed. So typically loans are paid by parents through the plus loan program while their child is in school. However, you can request as a parent for a deferment of that payment until after your child graduates, but it may not be a great idea to do so because interest will accrue on the balance while you're in college. So if I'm deferring my plus loan payments for 4 years, 5 years later until my child graduates, I'm going to owe a lot more than what I initially borrowed. Now, I mentioned before, students can borrow from these subsidized and unsubsidized loan programs. So you just want to make sure that you're aware of the difference between subsidized and unsubsidized. And the easiest way I teach students to remember this is that usually when you put "un" in front of something, it's not a good thing. So if I say I'm unable to help you or you're unlikely to go to college, that's usually not a good thing. So the difference is that subsidized is good and unsubsidized means not so good. Subsidized means that when you borrow this loan as a student while you're going to college, you don't have to make any payments. And the added bonus is that there's no interest being added to your balance while you're in college. So it's sort of like an interest-free student loan while you're in school. Now, the interest is actually being paid for by the federal government, so it's not free, but it's free to you because you don't have to worry about making interest payments while you're in college. And when you graduate, if you borrowed $3,500, all you owe is $3,500. You don't owe any additional interest at the time that you graduate. Unsubsidized loans are the opposite. You don't have to make payments while you're in college, but the interest will start rolling on your balance. You'll start owing some interest on this loan all of the years and months that you're in school. So if you're a student and you borrow an unsubsidized loan for your first freshman year of college, by the time you graduate 4 or 5 years later, you're going to owe a bit more in your balance than what you initially borrowed because they're going to add back all of that unpaid interest, something that we call capitalization. So if you could afford it, it's always good to at least make interest payments on student loans while you're in college if you take on an unsubsidized loan or if you're a parent and you're taking out a plus loan. Now, in addition to your federal aid on your award letter, you're also going to see state aid offers if your college is in New York. So in our Q&A that's going to come up when we're done with this session, we always get a question. Somebody will ask me, oh, my college didn't offer me any New York State aid. Should I give them a call? And I always ask them, well, what college is it? And they say, oh, it's Duquesne University, which is not in New York. So if you're looking at an out-of-state college, You're not going to see any New York State financial aid being offered there. It's only for schools that are in New York. So if you apply to CUNY or SUNY colleges, if you apply to private schools in New York State, and they determine based on a review of your FAFSA and your family's income that you may be eligible, the school may have estimated that you might be a TAP eligible student. Just because a college has offered TAP as part of your financial aid package doesn't mean that you've actually applied for it. So I want to make sure that you're aware of that, because one of the common questions we get from students is that, oh, my school is offering me TAP, and then I started college and all of a sudden they're taking it away saying I didn't apply. So the colleges are just guessing based on your family income. They think that you're going to apply for TAP. And in their disclosures and in the fine print, they're going to say, please make sure that you've actually applied with New York State Higher Education, my agency, for a TAP award to ensure that you actually get that money. Now, just like the federal Pell Grant, this is free money up to $5,665, but it depends on your family's income. The higher your income, the less likely you are to receive this award. And the lower the income, the more likely you are to receive closer to the maximum. So it's a sliding scale up to the point where you may not have been qualified. So just make sure that you've submitted your TAP application, and you should know what your amount is. And you should see a consistent TAP estimates across all of your New York schools. There are other New York State student aid programs that we offer, special scholarships like the Excelsior Scholarship, which gives free tuition to go to a SUNY or CUNY school, or the Enhanced Tuition Award, which gives students funding to go to certain private schools, and other special scholarships that we have, where you have to apply for these programs separately on our website, which you see on the screen. And the decision for these programs are not going to be made until maybe a few weeks from now, or after you've already made your college acceptance. So you would want to make sure that if you do apply for a program like the Excelsior Scholarship, Excelsior, usually the application for students for next year opens up in May. That if you are approved for the Excelsior Scholarship, your college would then include it in your financial aid offer and may give you a revised package. So you just want to make sure that you've applied for those programs. Some schools now are estimating the Excelsior Scholarship as part of your package, but same thing like TAP, if they've given you an estimate, they're going to tell you that you have to make sure that you win and you've applied for it to make sure that you're finally qualified. Now, what about money from your college? Depending on if you're looking at state university, or you're looking at some private schools in and out of New York State, you might be seeing some, different labeled institutional grants and scholarships. The Presidential Scholarship, the such and such grant, the such and such scholarship. And if you are being offered this money, especially with private schools, it might be the larger part of your aid offer, right? You might be seeing a private school that's offering you $30,000, $40,000 from their specific scholarship program. Whenever you're receiving institutional aid programs from your school, you just want to always make sure you ask them some important questions. You want to ask, is this grant or scholarship based on financial need, or is it based on merit? And the reason why you want to ask that is you want to make sure that you know what the qualification is. So is it based on your family's finances? That would be need-based. And if it's based on need, then if your family finances change one year to the next, the college may change the amount of your grant or scholarship. If it's based on merit, then you might be getting it based on your good grades, or that you're going to college for a certain major or academic program. And you might have certain requirements in order to keep that award every year. You also want to know if the scholarship or grant that they're offering you is renewable for all the years that you're going to be attending that college. So some schools may offer you a grant or scholarship, but it's only for the first year. It might be the one-time such and such grant. And, it might make the college look like they're affordable, but then in year 2, they take it away from you and you have to pay more for the school. So just make sure that you've asked your college, or you've read the fine print in your aid offer to know, is that grant or scholarship renewable? And then lastly, you want to find out, is this grant or scholarship, are there any special requirements that I need to meet every year? Some grants and scholarships, they're going to tell you that you need to refile your applications for financial aid every year, the FAFSA or the CSS profile. For merit-based grants or scholarships, they may tell you you need to keep a certain grade point average or stay within a certain major in the college in order to keep that program. And if you change your major, you could lose the scholarship. Or if your GPA falls under what they require, you may lose your grant or scholarship. So just make sure you know the fine print and details, so that way you can keep that award coming every year and you don't lose it unexpectedly. So bottom line, is this a good offer or not? So what we're going to be doing is we're going to be looking at the offer to make sure that we've gotten an offer from a college that fits our family's ability to pay for that school, which is going to be different for every family. There might be some families who have been saving for college ever since their children were born, and they have a nice, 529 college savings program, and they got some money, and they know that every year they can afford to pay a certain amount toward their college costs. And maybe one of the aid offers you're looking at hits that number exactly, like based on the free money, the grants and scholarships they're giving you, and the out-of-pocket costs of that college without the loans, without the work study. It meets your savings goals, and you can use your annual savings that you've put aside for college to pay the difference of the school, and the school's perfect. It meets your goals. For other families, they may not have had a plan, and college may have come a little bit more unexpectedly, and you might be depending on a lot more grant and scholarship aid, and maybe your goal is to not go into so much debt to pay for school. So you might be looking for a college that is more affordable, who's giving you more grant and scholarship aid, and where you don't have any or very little out-of-pocket costs. So that way, if your parents are, paycheck to paycheck, they really don't have savings, that your financial aid is going to carry the day. It's going to pay your bill. You don't have to worry about that. Some schools that may be giving you an offer for admission may be so affordable where your grant and scholarship offer covers not only their tuition, it covers their fees, it gives you money for books, it gives you money for transportation, and everything is covered. And your parents don't have to come out of their pocket to give you any money for college. Maybe that's the offer that you're looking for. It's going to be different from school to school. So let's look at a sample offer, kind of just to bring this point home and see, what an aid offer could look like when we're breaking it down. So we have a private college that, let's say this is a college of your dreams, a college that you were hoping would admit you, and you got admitted there and you were so happy, and now they send you the financial aid decision. And it looks complicated. It's looks like a chart like this, has a lot of numbers on there, and you're trying to figure out, okay, is this a good offer or not? So what we want to key in on first, like I said earlier, how much does this college cost every year? So we're going to focus in on this rectangle in yellow. This is the school's estimated cost of attendance. So now I know that their cost of attendance total per year is $61,826. And then they do a good job of breaking that apart. In the top section, they have what's directly billable to the student, right? The tuition fees, housing, meals. And then underneath that, they have what they estimate are the indirect costs. This is just their estimate of what the indirect costs are, the books, the transportations, the supplies. It could be different. It could be less for the student throughout the year. It could be more for a student throughout the year, but this is just what they think is the average for a typical student at their school. So if I'm looking at the cost of attendance, I'm going to split apart and say, okay, how much does this school cost directly? What do we need to pay the school to go there? And then we're also going to identify that we may need this money for direct costs. So I did the math there. We have direct costs of the school are near $60,000, with indirect the incidental costs are going to be around $1,900. If we look at the aid package that's being offered, they offered a total amount of financial aid of $39,945. But when we break that apart from grants and scholarships versus student loans and work study, we see that the grants and scholarships are only about $34,445. So we have about $5,500 in loans here, which I'm not going to count because loans are not free money. We have to pay that back if we borrow it. So if I subtract the free money from my cost of attendance, then the annual cost to attend this school is about $27,381, which means that through a combination of student loans that I might borrow as a student, that my parents might have to borrow for me, or money that I have saved, I'm going to have to come up and pay every year $27,381 to go to the school. Now, if I want to go to the school for 4 years, I would have to project this cost out for 4 years and multiply this by 4. If you're thinking, okay, well, I really want to go to the school, so let's borrow the $27,000. I want to go there. This was my dream school. We can do the loans. Let's do the loans. So as a student, they've already offered you $5,500 in subsidized and unsubsidized loans. So you know the student can borrow that much. The parent, though, would then be stuck with the rest of the balance, which is about $21,881 to cover this in a parent loan. So whether the parent could afford to do that, it's really up to the parent, and they know their financial situation better than anyone. But what I want to also key in on is if you make this commitment for year one, you have to make sure that you've projected this down the line for all 4 years. If I'm making a commitment to borrow $27,000 a year to go to this college, you'd have to expect that the college is going to give you the same type of financial aid every year as long as your finances don't change. And after 4 years, it would cost the student and parent a combined indebtedness of $110,000 in student loan debt to get a degree for this student at this specific college. So always when you're doing the math on the loans, you not only want to factor in, okay, how much am I taking out for this first year, but how much is this going to be after 4 years? And then you want to put this in a loan calculator. You want to be able to say, okay, what kind of payments will we be looking at after 4 years for the student, and what the payments would be looking like every year for the parent as that plus loan balance increases as you borrow more and more every year? And is that something that you could fit in your monthly expenses? So there are programs, free tools online and resources that I want to introduce you to that can help you actually do some of the math here, because figuring out these letters can be a little confusing. So what I want to show you is a free resource that we offer on our website, which is called our award letter comparison tool on hesc.ny.gov, which allows you to enter grant and scholarship and loan information for up to 3 different colleges, and then it can help you do some comparison to figure out which offers are the best. And you can find this, and we're going to have a resource page, you know, at the end of the program with these links. But this is our homepage, hesc.ny.gov. And if you scroll down on the page, you see a link here that says Financial Aid Award Comparison Tool. So you click Start Now, and you'd be brought into our tool where you could just enter the information for up to 3 different schools. You could also enter in what kind of degree program you're looking to go to, a 2 or 4 year degree, what kind of occupation you're looking to study, because we're going to look at some average starting salaries for you to help give you kind of an idea of after 4 years, you're going to be starting work and earning this much money. So there's all these different kind of occupations you could look at. I have teacher here for an example. And then you can start punching in the information to compare all your different schools. So you can see, you know, you set up something for school A, here's their total cost of attendance. Here's how much grant and scholarships they're offering me on the letter, and here's how much loans. And then do that for the other 2 schools. Here's school B, they cost $65,000 a year. Here's how much they're offering me in free money, the loans, and school C. So I have this all kind of pre-filled for time purposes. And then any additional information about your college financing plan, like have you won an outside scholarship that you're expecting to help give you money every year in addition to what the school has offered you? Do you have any money that you can pay out of your own savings or what you plan to earn and save from work every year? Do you have a 529 college savings plan where you plan to contribute from that every year, or what the parents have set aside every year that they believe they can pay on an annual basis? I've done a doom and gloom situation here where there's no plan. This is, you know, and this is a lot of families where there's no plan, there's no savings. They're trying to figure this out on the fly. So I didn't put anything for any of those additional programs. We're just going to compare our results and see what it looks like for these 3 different schools. So what you can see here is highlighted in the chart and explained here in the bottom text is that school A is actually our most, is our school that has the lowest bottom line cost before the loans. So if we're looking at these 3 different schools, we're looking at school A where they cost $50,000 a year, but they're giving $35,000 in grants and scholarships, meaning that the out-of-pocket or bottom line or net cost is 15. And through student loans that are being offered, we can cover the balance, but it has the lowest student loan debt offer out of all 3. School B is the most expensive. They didn't give as much grant and scholarships as we hoped. The remaining costs are very high, $45,000, and they're expecting us to borrow $45,000 a year. And school C, while it looks like the lowest cost school amongst all 3 schools, they're also giving the lowest amount of grant and scholarship aid, leaving a higher, slightly higher out-of-pocket or net cost balance to the family after the grants and scholarships are subtracted. So it costs about $1,500 more a year than the other school. So there's plenty of school tools like this that you can use. You have some additional information about the 4-year projected cost of this college. So remember, we talked about, oh, if I'm going to borrow, what it's going to look like over 4 years of borrowing. What's shocking here is school B. After borrowing from, if I decide to go to school B, if that was my dream school, I'm going to borrow that $45,000 every year, I'm going to owe 180 grand in debt, probably more with the interest. And then you have some more information about your, expected earnings and whether or not this is considered a high cost school based on what you can afford to pay based on your starting salary after that. You can kind of look down the line and you can print and save this. So really helpful tool. We're going to talk about some other tools. I'm going to stop our share right now as we enter into our Q&A session. So I'm going to hand it back to Paula.
Thank you so much, Mike, for the very informative presentation. I am sure that our attendees have some questions for both you and Brendan. So to begin, I'd like to ask a few questions and then we can open it up for Q&A. So Brandon, I guess you can answer this question. So let's say students receive an award letter, but they aren't satisfied with their award amount. Can the students counter their offer or apply for additional financial aid? Is there anything that they can do at all?
So I think there's two different really responses to this question. So at some colleges, there may be the option to talk to the financial aid office and say, I didn't get enough financial aid to make this affordable. And you could see what they say. There are some colleges that have a stance that say, absolutely not, we will not negotiate. And other colleges that will say, well, let me see another financial aid offer and maybe we can figure out some additional financial aid that we have available. It's going to vary across the board in terms of the types of colleges, the budgets they have available. And so there's no guarantee here. On another note, if you don't have enough financial aid because your financial circumstances have changed since when you filed the FAFSA, that is going to be very important to contact the financial aid office and explain maybe there's been an employment shift at home, or maybe there was a large home expense, such as having to replace a roof that took money from college savings. That's another reason why you might need to appeal for additional financial aid, and something that is more widely accepted across financial aid offices. And so there is a resource called Swift Student that if you are dealing with a financial circumstance that has shifted, they have some templates you can use in explaining that to the college, and that can be really helpful.
Okay, great. Mike, did you want to add to that or?
No, I think that's a great explanation. I would just also say to make sure you know the school's policies about submitting appeals. There are some schools that have very strict guidelines. They may not accept appeals from first-year students, so you just want to make sure that you're aware of those.
Okay. So here's another one. Once the student chooses a college, what are their next steps, right? So they've received these award letters and they've made a sound financial decision based on their family's income or affordability. What are their next steps?
So I'll start with the next steps is usually accepting the college's financial aid offer. So either signing and return the letter if it's a traditional type of offer where they want you to sign and return it, or if it's the online system, they might have you just check and accept the individual programs. It's important with the loans. The college can't impose the loans upon you. So just because they've been offered doesn't mean that they're going to be, you're now signed up to borrow. You have to actively accept them. And then there's a process of signing a promissory note and going through some other screening in order to then have the loan finalized. So you just want to make sure that you know those follow-up steps as part of accepting your aid offer. And just because you accept an aid offer doesn't mean you can't appeal it. So sometimes we get that question as well, like, oh, I accepted the aid. Should I not accept it because I want to appeal? You can still accept aid and you can still, of course, submit an appeal. I recommend, though, if you are accepting an appeal, not to say, well, I'm going to decline this work study program and I'm going to appeal for more free money. It might not look good for you because work study is a resource that they're offering. And if you're declining the work study, they might say, well, that's part of your resources. So I would not decline anything if you're appealing. Just you don't have to accept the loans at that point, but you can accept and still submit an appeal, or if you're waiting for an appeal, you still can accept.
Okay. Brendan, did you want to add anything to that?
I'll just add two things that we always talk to students about when working with students directly is one, the minute you accept that financial aid offer, hopefully you've already figured it out, but keep thinking about how you are covering that bill, because summer is going to fly by and that bill is going to come due. And so start preparing the minute you know where you're going, talking with your family, figuring out those next steps. Also, the other thing to be aware of is many college campuses require you to have health insurance of some type or some form. And so there might be a process where maybe you're covered by other health insurance where you need to waive the health insurance that the college is asking you to take. Maybe you need to actually take the college's health insurance, but it is something that is so important to think about when you make your decision, because if you forget to waive health insurance, it could be, I've seen health insurance that costs upwards of $3,000. And so it can be a major expense. And so starting to explore whether or not you will be covered elsewhere or you'll need to take that health insurance is also an important step to think about.
Okay, great. So if college offers institutional aid, what types of questions should students ask regarding this type of aid?
So
I think you
Mike
mentioned it earlier.
Yeah, I was going to say Mike covered some of that, and so just to repeat, and then Mike, feel free obviously to jump in and cover anything I missed. You want to think about what that aid is, like. Basically, is that aid requiring you to do certain things? Do you need to be a certain major? Do you need to be a certain enrollment status? Do you need to maintain a certain GPA? How many years is it for? Is it a 1-year scholarship or grant, or is it a 2-year, 3-year, 4-year? Does it shift over time? And so those are some of the most important steps to think about when you receive institutional aid. And many colleges might list them might list the requirements on their financial aid offer. Others won't, and you might have to dig deeper, or you might even have to call the financial aid office. But really important to explore further when you see that institutional aid.
Okay.
Yeah, there might even be some other requirements for you to accept that grant or scholarship. So I used to work for a college, and some of our scholarships were alumni donated. So as part of accepting the grant, they asked the student write a thank you letter to the alumni donor of that scholarship. So there might be some other fulfillment steps that the student might have to take as part of receiving this special type of scholarship program from that specific college or alumni donor. So just be aware of all of those additional requirements. Also be aware of any refiling deadlines. So they might say you need to refile every year. And for this type of grant or scholarship, you must refile every year by March 1st. I had a student I was helping with who attended a private college university, and as a third-year junior, lost one of their scholarships because they renewed their FAFSA beyond that scholarship's renewal deadline. And they hadn't been aware of it. Second year, they got lucky. They just happened to file early. Third year, they got kind of a little bit more into that college haze, and they forgot to renew, like, oh, financial aid comes every year. They renewed late, and they didn't refund them for that scholarship. They didn't renew that scholarship, and they lost a chunk of funding. So yeah, being aware of those refiling requirements and getting your applications resubmitted every year, FAFSA, CSS, whatever's required.
Okay. So we know that some students are dead set on a specific school, and some of them are applying for early admission or early decision. So if a student applies for early decision and has already made a deposit, but later hears from another school with a better financial aid offer, what are their options?
So I'll start. So there's some change around the law regarding this about no longer having to be locked into schools. Schools kind of don't like it, but it was a federal sort of, not a law, but it was a court decision that kind of went in and said colleges can no longer restrict students or penalize students for having this choice. So even if you're have already committed to a college, and if you later hear about a college is giving you a better offer, even beyond May 1st, it is within your rights as a consumer, as somebody who's shopping for a college, to change your commitment. The only thing you need to be mindful of, though, is if you put any kind of monetary deposit on your acceptance, or you held your seat at the school that you're no longer committing to, that school is within their rights to make their deposit non-refundable. So you would lose the $300 or $400 or whatever it was that you put down as a deposit if you were required to deposit as a penalty, and that would have been in the fine print of the deposit guidelines. So just be aware of that. I would never tell students, oh yeah, commit to all of these schools, because you're going to be losing out on some of those deposits. So, but you are within your rights to change your mind if you do get a better offer. You can't be locked in the way that it used to be.
Thank you. So I think you've covered a lot of information from the presentation, but I'm sure that families might still have some questions. So we're going to take the next 10 minutes and see if our attendees have any questions for us. You can use the Q&A or the chat feature, and we will address the questions to Brendan and Mike, and they can help answer that. But in the meantime, while we do that, I will share my screen with you on some additional sources. We know that Mike showed us some financial aid comparison tools. students can use to help them make sound financial aid decision. And also Brendan spoke about SWIFT. So I'm going to share my screen with you of the various types of resources that are out there. 1 second. So here we have SWIFT student, and Maria is going to put the links in the chat for you guys. And again, you can also ask questions. We also have Aspire's college cost calculator. There's also an after the financial aid offer handout and how to decipher your aid offers blog post. So those will be in the chat link.
And I saw a question early on while I was presenting about the loans, because a lot of people get surprised when I say that the student's borrowing ability is limited to $5,500. And that's the truth. As a student who is, young age, starting college, has no debt to income ratio, the federal government doesn't let that student borrow an unlimited amount of money to pay for whatever college they want to go to. So as a first year freshman, their typical borrowing ability from the federal government is $5,500 in that combination of subsidized and unsubsidized loans. So if you're thinking, I need to borrow $30,000 for college, the student's going to take that all in their name. Sometimes I hear parents say that they want to go to that school, they borrow the money. Well, they can borrow up to $5,500, and then the college would probably then offer the plus loan to the parent to borrow the rest. Now, there are private student loans that you can get where students can be the primary borrower, but the same thing applies. We're talking about a 17, 18-year-old with no debt to income ratio. To borrow a private loan from whatever lender, you would probably need a parent or somebody else to co-sign, meaning that if you co-sign, you're basically a co-borrower. So that loan is not only going to be the student's loan. If you're co-signing on a private loan with a student, it's your debt until you're released from that co-signer obligation. So you want to be aware of that as well if you're thinking that all the borrowing is going to be done by the student. Also, sometimes there's some misinformation around plus loans. Sometimes I say students talking to their parents saying, "Oh, mom, don't worry, borrow the plus loan. When I graduate from college and I'm, a superstar recording artist in the music industry, I'll just pay all those loans back." Parent loans are in your name as parents. So regardless of your child's college outcome and later career decisions, that's still your debt as a parent. So you have to make sure that you have a plan to pay that back. Because if your child becomes an artist and they're more of the starving artist, as opposed to the popping, I'm making a lot of money artist, you're still stuck with that debt. So that's going to affect your credit. That's going to be a bill that's coming to you every month. And that's going to have a lot of impact on you. So if you do take out parent loans, you cannot transfer those to the student, when the student gets their career and everything like that. So you just want to make sure that you're aware of that if you're taking out parent loans.
And Mike, can you speak a little bit on eligibility for parent loans? Is it based on credit, and how much can they take out?
Sure. So yeah, they do a very general credit screening. What they're looking for is whether or not the parent has an adverse credit history. So they're not looking at debt to income ratio. They're not looking at how much you owe in credit cards and other debt and mortgage. They're really looking to see, do you have a clean credit history? So as long as you don't have any bankruptcies or liens, you don't have any forbearances or accounts in default, as long as your credit history is clean and it shows that you're current, you don't have any liens or any holds against you or any defaults, you can borrow the parent loan. Even if you are up to your eyeballs in debt, you can still take out that parent loan as long as your credit is clean. So they look at that. And then in terms of how much you can borrow through the parent loan, it's going to be whatever the remaining cost of the college is after the students' loans and their grants and scholarships have been factored in, then you could borrow the remaining cost. So typically when you see the loan offer, the parent loan is the higher of the loans being offered because those subsidized and unsubsidized loans are so low.
Okay, thank you. I think we have a question. To submit an appeal, would the school want to see our most recent 2021 W-2s? And does the Parent Plus loan usually offer low interest rate?
I can take it. I'll start, and then Mike obviously jump in to give you a little breather there. So in terms of submitting an appeal, the college is going to want to see documentation. So depending on what you are appealing and what the circumstances are, they could ask for 2021 W-2s. If there's been a change in financial circumstances, they might ask for unemployment information if someone has lost a job. They might ask for invoices if it's an expense that you're appealing about. And so I would be prepared to provide documentation. Colleges are not going to take you at your word that there's been a shift. They're going to want to see tax forms, W-2s, 1099s if you have them, anything along those lines. And then in terms of the Parent Plus loan, the interest rate, the current interest rate is 6.28%. That interest rate gets reset in July. And the key thing to be aware is it really depends on, like, whether the interest rate is good, really depends on where you are able to borrow from and what options you have. And so the advice I give to all students and families around the Plus loan and around borrowing beyond direct loans that students have access to is explore all your options, including the Plus loan, including other providers, to see where you can get the best rates if you do need to borrow beyond what is being offered directly to the student. And so just don't take any one option and run with it. Make sure you've explored all of your options to see what interest rates you have access to.
Yeah, I agree. And also just make sure that you've looked a little bit at the monthly payment expense, and also that you've looked at other financing options, because sometimes colleges will offer a monthly payment plan where you can pay some of the balance every month, split up into 10 or 12 equal payments. So it might not just be, oh, let's just do it all in the Plus loan. Maybe you can afford to make a couple $100 payments in a payment plan toward the balance, and then the rest in the student loans. Remember, those parent loans are going to carry interest. So some folks are like, oh, you know what, we'll just put it all in the loan, let it get carried under the 6.28% interest. But remember, the interest rate as you borrow, as the principal of that loan increases, the interest rate is going to have more of an effect on that balance. And also, if you decide to defer your payments, remember capitalization. Capitalization is where all of those years and months of unpaid interest, once you end your deferment period, gets added back to the principal. So if you have $5,000 in interest accruals over all these years of college, and you never made $1 in loan payments, and you borrowed, let's say, $20,000, your new starting balance when you enter into repayment is going to be the $20,000 plus all of the unpaid interest, so about $25,000. In this rough example, it might not be that high, but all the capitalization effect is real. And then they charge you interest on that new balance. So you end up paying interest on interest. So deferment could be a little bit, it's very attractive for families. They're like, oh, just borrow the Plus loan, defer it, and then we won't have to worry about it until 4 or 5 years down the road. But deferments could catch up to you. So I always say, if you can't afford to make the monthly payment on the Plus loan, at least see if you could set up a monthly interest payment on the loan to keep it down to the principal. And that would also be a helpful strategy to keep the overall balance low. But if you could make principal plus interest payments, that's ideal.
Thank you, guys, Mike and Brendan. So I'm going to check the chat and Q&A section and see if there are any more questions. I'm not seeing any right now. And I guess we're getting close to the time. So before we go, just wanted to share another resource with you guys. So if you guys would like more information on events such as this one that we're having, if you can go to our Start Here, Get There.org /events page, you can see types of events that we're having, such as this panel discussion, drop-in FAFSA and TAP completion workshops, as well as other events. And also, if you would like more information on the various types of financial aid programs available through New York State, including the TAP, Excelsior, Enhanced Tuition, you can visit us at hesc.ny.gov. And that's where also you will find our award letter comparison tool that Mike demonstrated earlier. And if you guys have any questions about this discussion panel or anything else, you can email us at thepath@hesc.ny.gov. And I think we got another question. Let me just double check, or a couple. Someone asked, can individuals get one-on-one? Yes, for our FAFSA workshops, you can sign up and we will pair you up with a financial aid expert that will help you, that will walk you through the FAFSA and TAP one-on-one. me check her questions. And that's it for the questions. So I want to thank everyone for joining us. Mike and Brendan, thank you so much for your expertise. That was very informative. And I hope that our attendees have found this information useful and their search or journey in comparing award letters. So do you guys have any closing remarks that you'd like to share or anything?
No, good luck. Good luck, everyone. Choose a good school, and education is very important. So it's a great financial commitment. I'd rather invest in my education than be getting a car or something else right now at very high rates. So definitely, your education is worth the investment. Just make sure you make it a smart one.
And I would just say thank you for being here tonight. Thanks for listening to us talk about financial aid. And the piece of advice I would give you is when you make your college decision, remember that it's not just for 1 year, usually it's for multiple years. And keep that in mind as you're thinking about borrowing, thinking about being able to make payments. Is think of the long-term costs. Think of that monthly payment, as Mike called out, because it is so important that not only are you getting to, but also being able to get through and graduate to earn that degree.
Okay, thank you so much, everyone. Appreciate you for being here and have a good evening.